I hand over Lewis and the team for the presentation. Let's welcome him with a round of applause. Let's welcome him with a round of applause.
And to see the people we partner with. This afternoon, Antoinette and I will lead the presentation, supported by the Executive Committee and the CEO of Mobile Money Fintech Limited and the CFO. So we've got the whole team here. As outlined in the agenda slide, which is hopefully coming up shortly. Otherwise, there we go. We'll begin with a review of our key performance highlights in the first half of the year. This is obviously our H1 performance. We will then take a deeper look at our operational performance and the value created during the H1 period. Then I'll hand over to Antoinette, who will provide an overview of our financial performance. And finally, I'll conclude with our outlook in the second half and our medium-term guidance. So let's start off and dive straight in and look at the H1 2026 highlights. For the first 6 months of the year, we demonstrated resilience of our business model, and the strength of our execution, which is one of our key criteria. Against a backdrop of an evolving market conditions, we remain focused on serving our customers, executing against our strategy, and delivering sustainable value for all our stakeholders. So our key messages for today are, and it's highlighted on the slide, there are 5 key messages, and I'd like you to take away from the presentation. So we're starting up front with our messages, and then we'll unpack them. First, we delivered strong service revenue growth of 32.3%, supported by continued momentum of our home, our digital. This performance reflects the success of our platform strategy and our ability to capture growing demand for two things go hand in hand. Third, we continue to enhance shareholder value through stronger earnings and the payment of quarterly dividends. You can clap at that stage if you want. I'm a shareholder, I'm going to clap. I like quarterly dividends. Reinforcing our commitment to delivering attractive and sustainable returns to our shareholders. Fourth, we deepen customer engagement by increasing adoption of digital channels and by using AI-driven personalization to enhance customer experience and strengthen loyalty across our platforms. Finally, we remain focused on building resilient and sustainable business while positioning MTN Ghana to capture significant growth opportunities that exist across connectivity, fintech, digital services, and enterprise solutions. So let's dive into some of the drivers for H1. We look at the performance highlights for the first half of 2026, which are on the screen, which demonstrate how our continued focus on disciplined execution translated into strong growth, enhanced profitability, and improved shareholder returns. Despite a dynamic operating environment, we delivered another strong set of results, supported by sustained demand for our services, continued innovation across our platforms, and disciplined cost and capital management. Let's start with the growth element. The service and revenue increased 32.3% to 15 billion Ghana cedis, driven by solid contributions from our connectivity and fintech businesses. Data remains a key growth engine, with revenue increasing by 47.1% to 8.8 billion cedis, reflecting growing demand and increased customer engagement. Mobile money revenue also increased by 23.3% to 3.5 billion cedis, underpinned by higher transaction volumes and increased usage of our financial services ecosystem. This strong top-line performance that you can see translated into robust earnings growth ratio. You can see EBITDA increased by 37.2% to 9.3 billion, while our EBITDA margin expanded 3.4 percentage points to 61.8. This demonstrates the benefits of scale, operating leverage, and disciplined execution. Our earnings performance flowed through to profitability. Profit before tax increased to 56.4% to 7.4 billion cedis, while profit after tax grew 46.8% to 5.1 billion cedis. As a result, earnings per share increased by 46.1% to 0.338 cedis, reflecting our ability to convert revenue growth into meaningful earnings growth for shareholders, and I'm sure that's something that you're all reflecting on. Importantly, we also continue to deliver attractive returns to shareholders. We declared a second quarter dividend of 0.06 cedis per share, bringing the total interim dividend for the first half of 2026 to 0.12 cedis per share, up 50% year on year. As in the first quarter, this dividend comprises 0.03 cedis per share from Scancom and 0.03 per share from Mobile Money Fintech Limited, underscoring the strength of both businesses and our commitment to returning value to shareholders. Beyond this, our returns metric improved significantly, with our return on invested capital increasing by 11.5 percentage points to 82.7%. Our return on equity increased by 13.5 percentage points to 38.8%, and our return on assets improving by 2.7 percentage points to 8.4%. These outcomes reflect the continued focus on disciplined capital allocation. Overall, these results underscore the resilience of our business model and the effectiveness of our strategy. We are growing our revenue base, expanding profitability, generating strong returns, and creating sustainable value for our shareholders while continuing to invest for the future growth. I'd now like to look at our macroeconomic context, which many of you are aware of. Before discussing this operational performance in more detail, this is an overview of the macroeconomic environment and the key market developments that have shaped our operating landscape during the first half of 2026. The macroeconomic backdrop for Ghana the first half of 2026 remained relatively favorable, despite renewed pressure emerging during the second quarter. These pressures were driven primarily by a weakening of the cedi and a corresponding increase in inflation towards the end of Q2. Starting with inflation, the Ghanaian economy continued to benefit from a significantly improved inflation environment compared with previous year. Although inflationary pressures picked up during the second quarter, reversing some of the declines recorded in the first quarter, the headline inflation remains substantially lower on a year-on-year basis, closing at 5.3% in June 26, compared to 13.7% in June 25. As you can see on the slide, the average inflation rate in the first half of the year declined sharply to 3.8%, down from 20.4% in H1 of 2025, representing an improvement of 16.6 percentage points. This rapid disinflation helps support consumer purchasing power, business planning, and overall economic stability, creating a more supportive operating environment. Turning to foreign exchange, the cedi experienced lower volatility than in previous years. Although the pressures intensified during the second quarter, according to the Bank of Ghana interbank rates, the cedi depreciated by 8.6% against the US dollar during the first half of 2026, moving from 10.45 cedis per US dollar in December of 25 to 11.35 per US dollar in June of 2026. The depreciation was relatively modest during the first quarter, but accelerated in the second quarter due to increased pressures on the currency. The sharp and weakening of the CD continued to renew inflationary pressures and somewhat less favorable cost environment towards the end of the half year. Overall, however, the macroeconomic environment remained considerably more supportive than the one we faced in the prior year. Against this backdrop, we remain focused on disciplined execution, enabling us to capture growth opportunities while continuing to create value for customers, shareholders, and other stakeholders. Now let's just, as I mentioned at the beginning of the presentation, and when we look at our operational view, we executed strongly against our commercial objectives during the period under review. However, before I delve deeper into our operational performance, I'd like to highlight some of our social initiatives being undertaken by both the company and the MTN Ghana Foundation as part of our commitment to creating shared value and giving back to the communities we serve. During the first half of 2026, we advanced our shared value agenda across healthcare, education, economic empowerment, environmental sustainability, and public sector support. Starting with healthcare, one of the most significant milestones during the period was the commissioning and handover of the newly constructed Accident and Emergency Center at the Ho Teaching Hospital. This modern facility strengthens emergency healthcare delivery across the Volta and Oti regions and surrounding communities, improving access to quality healthcare for hundreds of thousands of Ghanaians. The project reflects a long-standing commitment to supporting critical national infrastructure and improving health outcomes. We further extended our healthcare impact through this year's Yellow Care program, which was delivered under the theme Expanding Equitable Healthcare for Every Community. Through the dedication of our employees, 3,888 hospital beds and accessories were refurbished and donated to 7 regional hospitals across the country. In addition, patients were supported with their medical bill payments, which we also helped facilitate health insurance enrollment and provided hygiene facilities for schools to promote healthier learning environments. In education, we continue to invest in Ghana's future workforce through the MTN Bright Scholarship Program. During the period, applications were open to another cohort of 500 beneficiaries, with a strong emphasis on STEM education and teacher development. Through this initiative, we continue to remove financial barriers to education while helping develop the skills needed for Ghana's growing digital economy. Supporting entrepreneurship and economic inclusion also remained a priority. Through the MTN Business SME Accelerate program, we provided grants, executive training, and business development to support to high potential small business, helping them strengthen their competitiveness, scale their operations, and create employment opportunities. On environmental sustainability, we continue to strengthen our ESG capabilities as we advance our readiness for mandatory sustainability reporting. During the period, we focused on enhancing ESG management structures, building internal awareness, and embedding sustainability considerations more deeply into our decision-making processes. These efforts support our ambition of creating long-term value, operating responsibly and sustainably. We're actually in our sustainability month this month, just so I can add that. Beyond these social and environmental initiatives, we also continue to make a significant contribution to the national economy. During the first half of the year, MTN Ghana paid 5.6 billion cedis in direct and indirect taxes and 384.7 million in fees and levies to various government agencies, reaffirming our position as one of Ghana's largest corporate taxpayers and contributors to national development. Taken together, these investments and contributions demonstrate that our impact extends well beyond the financial results. Through our operations, our foundation, and our broader sustainability agenda, we continue to create value for shareholders, customers, and communities while supporting Ghana's long-term growth and development as a force for good partner. I will now provide an update on some important governance and regulatory developments during the first half of 2026. Starting with governance, we implemented the enhancements to our dividend framework that provides greater flexibility in returning capital to shareholders. During the period, Scancom plc revised its dividend policy to allow the board to declare interim dividends on a quarterly basis following the release of each quarter's financial results. This enhancement aligns with our dividend framework more closely with the strong cash-generating nature of our business, enables us to return value to shareholders more regularly, subject to earnings performance, cash flow generation, retained earnings, debt covenant requirements, and all applicable regulatory considerations. Turning to our fintech business, we successfully completed the structural separation of mobile money fintech during the first quarter. This represents a significant milestone in the evolution of our fintech strategy and reinforces our confidence in the long-term growth potential of the business. The separation enhances the operational focus, agility, and strategic flexibility of the fintech business, allowing management to pursue growth opportunities more effectively while strengthening the platform for future innovation and value creation. Importantly, the stapled share structure remains unchanged. This preserves the simplicity of MTN Ghana investment proposition while ensuring that shareholders continue to participate in the growth and value creation opportunities generated by both our connectivity and our fintech business. Together, these developments demonstrate our ongoing commitment to sound governance, capital management, and building the foundations for sustainable long-term growth across all parts of our business. With that, let me take you through our operational performance and the progress we made against our strategic priorities during the period. Our H1 2026 results highlight the resilience of both our connectivity and our fintech businesses and reflect the disciplined execution of our growth strategy. Strong momentum in data, digital services, mobile money more than offset the continued decline in traditional voice services, resulting in service revenue growth of 32.3% year-on-year to 15 billion cedis. This performance was supported by sustained demand for connectivity and financial services, increasing customer engagement across platforms, and continued investments in network expansion, platform modernization, and customer experience. Collectively, these factors reinforce the diversification resilience of our revenue base and strengthen our confidence in the long-term growth opportunities ahead. Starting with data, which remains our largest revenue stream. Revenue increased by 47.1% to 8.8 billion cedis. This strong performance was supported by a 17% increase in active data subscribers to 21.3 million and 38% increase in average monthly data consumption to 19.3 gigabytes per active user. These trends reflect continued smartphone adoption, which is very important for data, and increasing demand for digital services, including video streaming and other content-rich applications that you can use on a smartphone. As a result, data contributed 58.7% of our total service revenue, up from 52.8% a year ago, highlighting the continued evolution of our revenue mix towards higher growth digital services. Turning to voice. The revenue declined by 1.4% year-on-year to 1.9 billion, reflecting the ongoing migration of customers' communications to VoIP services like WhatsApp. While this remains a structural industry trend, the decline was partly mitigated by targeted customer value management initiatives and disciplined commercial execution. These efforts help support customer engagement and contributed to an 8.5% increase in subscriber base to 32.8 million customers. Consequently, voice accounted for 12.9% of our service revenue, down from 17.3% in the prior year, reflecting the ongoing transition towards more scalable and high growth revenue streams. Our digital business, which was a standout performance, continued to deliver exceptional growth, with the revenue increasing by 98% to 377 million. Growth was driven by increased adoption of gaming. And when I mean gaming, I don't mean betting, I mean Call of Duty, that kind of gaming. Video and digital content services supported by stronger customer engagement, enhanced propositions, and strategic partnerships. Digital revenue contributed 2.5% of service revenue compared to 1.7% in H1 of 25, demonstrate continued progress in diversifying our revenue base and building new growth engines. Turning to mobile money, revenue increased by 23.3% to 3.5 billion cedis, supported by strong performance across both our core wallet business and advanced financial service. Active mobile money users increased by 3.1% to 18.3 million, while transaction activity remained robust, with transaction volumes increasing by 23.3% and transaction value growing by 44.4%. Within mobile money, basic services grew by 21.2% to 2.3 billion, driven primarily by strong growth in person-to-person transfers. I'll get that. Thank you so much. Thank you. See, a lot of reading, sir. No, we've got to make sure we tell you everything, eh? Otherwise, they'll never invite us back. So advanced service revenue increased by 27.3% to 1.2 billion, supported by increased adoption of digital payments, lending products, and other value-added financial services. While mobile money's contribution to service revenue moderated to 23.4% compared to with 25.1% of the prior year, this reflects the faster growth in data revenues rather than a slowdown in the business. The continued expansion of our fintech ecosystem, together with the successful structural separation completed the first quarters, positions the business well to capture our future opportunities arising from increasing financial inclusion and the digitization of payments across Ghana. Overall, the strong growth delivered across our key revenue streams demonstrates the effectiveness of our strategy, the strength of our platforms, and our ability to adapt to evolving customer needs. It also reinforces our confidence that we are well positioned to sustain growth and create long-term value for all stakeholders. Now I will hand over to Antoinette, who will share the financial review with you.
Thank you, Stephen. Good afternoon once again, ladies and gentlemen, and thank you for your time with us today. We appreciate the time you have taken to participate in our Facts Behind Figures presentation and for your continued interest in MTN Ghana. As Stephen has highlighted, we developed a strong operational performance during the first half of the year, supported by solid commercial execution across our connectivity and fintech businesses. This performance provides a strong foundation for the financial results I will discuss over the next few slides. Starting with revenue, our total revenue increased by 32.2% year-on-year to 15 billion cedis, driven by sustained demand for data services, increasing adoption of digital financial services, and a higher engagement across all our digital platforms. This performance was supported by our continued investment in network expansion, platform modernization, and customer experience initiatives, enabling us to meet the evolving needs of our customers while further diversifying our revenue base. Turning to our costs, total cost increased by 21.6% to 5.7 billion cedis, reflecting continued investment to support the strong commercial momentum across the business. Breaking this down further, cost of sales increased by 17.9% to 2.3 billion cedis, driven primarily by revenue-enhancing commercial initiatives across both connectivity and fintech businesses. Meanwhile, operating expenses increased by 24.2% to 3.4 billion cedis, largely due to higher network-related expenditure, rent, utilities, and maintenance costs required to support our growing customer demand and to ensure that we maintain the quality and resilience of our network. Importantly, revenue growth significantly outpaced cost growth during the period. Combined with our ongoing focus on operational efficiency and disciplined cost management, this enabled EBITDA to increase by 39.8% to 9.3 billion cedis. As a result, our EBITDA margin expanded further by 3.4 percentage points to 61.8%, our highest margin ever reported, demonstrating our ability to scale the business efficiently while preserving profitability and generating operating leverage. I dare say that our margin is best in class globally. Moving further down the income statement, depreciation and amortization increased by 26% to 1.6 billion cedis, reflecting our continued investment in network infrastructure, capacity expansion, and IT platforms. These investments are essential to supporting future growth, maintaining network leadership, and enhancing customer experience. Our net finance costs increased by 12.6% to 268.8 million cedis, while finance costs declined by 2.8% year-on-year to 475.7 million cedis. Finance income decreased by a higher 17.4% to 206.9 million cedis, in line with the decline in interest rates in our economy. The net movement resulted in a higher net finance charge for the period. The strength of our underlying operational performance drove strong bottom line growth. Profits after taxes increased by 43.3% to 5.1 billion cedis, while earnings per share increased by 43.2% to 38.8 pesos, reflecting our ability to translate revenue growth into enhanced profitability and shareholder value. And this is what has enabled us to pay quarterly dividends 2 quarters in a row. Overall, these results demonstrate the quality of our earnings, the scalability of our business model, and our continued focus on balancing growth, profitability, and disciplined investment to drive long-term value creation. Let me now turn to our capital allocation and investment priorities during the first half of 2026. Our approach to capital allocation remains guided by our value-based capital allocation framework, which seeks to balance investment for growth, returns to shareholders, and the long-term sustainability of the business. During the period, we invested 1.9 billion cedis in ex-lease capex, that is our capital expenditure excluding leases, reflecting our continued commitment to supporting both the near-term and long-term growth of the business. We invest to make sure that we don't just generate great profits and returns today, but that the business remains sustainable in the long term. These investments were primarily towards strengthening our network infrastructure, expanding capacity, modernizing our technology platforms, and enhancing the digital capabilities needed to support rising demand for connectivity, digital services, and financial solutions. They also enabled us to maintain network quality, improve customer experience, and increase the scalability and resilience of our operations. As shown on the slide on the screen, A big part of our investments continue to be directed towards radio and infrastructure, the lifeblood of our business. And that accounted for approximately 63% of total capex, reflecting our commitment to maintaining our network leadership and supporting future traffic growth. We also continue to invest in IT systems and transmission infrastructure to strengthen our digital capabilities and support innovation across the business. Importantly, while we remain committed to investing in growth opportunities, we continue to place significant emphasis on capital efficiency. This is evident in the continued improvement in our capex intensity, which declined from 20.4% in half 1 2025 to 12.9% in half 1 2026. The reduction reflects both the benefits of disciplined capital allocation and the strong growth in revenue during the period. While we are pleased with this improvement, it is important to emphasize that our focus is not on reducing investment for its own sake. Rather, we remain committed to investing where we see compelling opportunities to drive growth, to enhance customer experience, strengthen our competitive position, and creating long-term shareholder value. As demand for data digital services, home and fintech solutions continues to evolve, we will continue to allocate capital in a disciplined manner to opportunities that meet our return thresholds and support sustainable growth. Our overarching purpose is to ensure that whatever we do today ensures sustainability in the long term and ensures that we are still here tomorrow. Stephen mentioned that we are in our sustainability month. This is just a reminder that we take sustainability seriously in everything we do. Overall, our capital allocation during the period demonstrates our ability to strike the right balance between investing for the future, improving capital efficiency, and delivering attractive returns to our shareholders. Thank you for your belief in us. We will continue to deliver to the best of our ability and ensure that we run your business well and in control. With that, I will now hand over back to Stephen, who will take you through our outlook for the remainder of 2026 and our medium-term outlook. Thank you.
Thanks, Antoinette. I'm sure you thought you're rid of me, but not yet. All right, so I'm going to talk about looking into the future and the outlook. So the outlook for MTN Ghana remains compelling and firmly anchored in our strategy called Ambition 2030, which is across the group. We are well positioned to capture the significant structural growth opportunities across connectivity, fintech, digital services, home broadband, enterprise solutions, and our platform businesses. Through disciplined execution of this strategy, we remain focused on delivering sustainable long-term value for our shareholders and all our stakeholders. As we look ahead, while the global outlook for the second half of 2026 remains subject to uncertainty from ongoing geopolitical developments, trade tensions, and potential disruptions to global supply chains, we believe Ghana's macroeconomic environment is likely to remain relatively supportive, notwithstanding pockets of volatility. Encouragingly, inflation is expected to continue trending towards the lower end of the Bank of Ghana's medium-term target range, supported by prudent monetary policy, fiscal consolidation efforts, and an improving external buffers. These developments should help sustain a more stable operating environment for businesses and consumers and support continued demand for digital and financial services. Against this backdrop, we remain firmly focused on executing our Ambition 2030 strategy, which provides clear and well-defined roadmap for MTN Ghana's future growth. At its core, our strategy is built around our ambition to be a platform of choice for consumers, homes, businesses by leveraging the power of connectivity, fintech, and digital infrastructure. As shown on the slide, our priorities are anchored around several key growth pillars. Within connectivity, we remain focused on scaling data usage, accelerating home broadband adoption, and empowering enterprises through innovative digital solutions. Our continued investments in network quality, capacity, and coverage position us well to capitalize these trends. In fintech, our priorities are to deepen the ecosystem participation and accelerate the adoption of advanced financial services. At the same time, we will continue investing in digital infrastructure, including fiber networks and AI, to support the next phase of Ghana's digital transformation. Supporting these growth pillars are three critical enablers. First, we remain committed to delivering a leading customer experience across all our platforms and touchpoints. Second, we continue to leverage artificial intelligence to improve productivity, enhance personalization, strengthen operational efficiency, and unlock new growth opportunities. Third, we remain focused on creating shared value through greater financial inclusion, expanded digital access, environmental stewardship, and meaningful social impact. Overall, we remain confident in the structural growth opportunities available in Ghana and in the strength of our diversified business model. We will continue to closely monitor the external risks and evolving market conditions. We believe MTN Ghana is well positioned to execute its strategic priorities, capture emerging opportunities, and deliver sustainable long-term value for shareholders and broader stakeholders alike. I'll now turn to our medium-term guidance. I want to start by reiterating our medium-term outlook and the confidence we have in our strategic direction. Against the macroeconomic and strategic backdrop and based on our current assessment of market conditions, we are maintaining our medium-term guidance. As shown on the slide in front of you, we continue to target service revenue growth in the mid to upper 30s, supported by sustained growth in our connectivity, fintech, home, enterprise, and digital businesses. We will also continue to target EBITDA margin in the mid to upper 50s, underpinned by operating leverage, continued revenue diversification, disciplined cost management, and ongoing benefits of our efficiency initiatives. With respect to capital allocation, we remain focused on delivering and improving ex-lease CapEx intensity profile over the medium term. While capital efficiency remains a key priority, we will continue to invest selectively in opportunities that strengthen our network, leadership, enhance customer experience, and expand our digital infrastructure and support long-term growth. Finally, we remain committed to delivering attractive shareholder returns through our 60 to 80% dividend payout framework, supported by strong cash flow generation, disciplined capital allocation, and resilient balance sheet. It is important to note that while we are maintaining our current medium-term guidance, we will continue to closely monitor developments across our operating environment. Should market conditions evolve materially, we will reassess our assumptions and, where appropriate, update our medium-term outlook over the next 3 to 5 years. Before we move on to Q&A, I'd like to briefly address the legal proceedings recently initiated by Clydestone Ghana plc. MTN Ghana has been served with a writ of summons and statement of claim relating to Clydestone's alleged role in the initiation of mobile money services in Ghana, concerning matters that are said to date back almost 20 years. MTN Ghana does not accept the claims made, considers them to be without merit, and will contest the proceedings fully. Based on our assessment of the matter and the information currently available, no financial provision has been recognized in respect of this claim. MTN Ghana will, however, not comment further on the substantive issues raised in the claim while the matter is before the court. MTN Ghana assures all its stakeholders that the proceedings do not affect our operations, services, performance, results, or mobile money services operated under Mobile Money Fintech Limited. MTN Ghana will continue to comply with all the applicable disclosure obligations and will notify shareholders and the market of any material developments in accordance with the listing rules. Our focus remains on executing our strategy, serving our customers, and delivering sustainable value for our shareholders and stakeholders. Thank you for your time and attention, and I'll leave it over to our facilitator. Thank you.
Thank you very much, Steve and Antoinette. This has been a very comprehensive presentation, touching on every area that stakeholders will be interested in: financial performance, operations, sustainability, and then the outlook for the rest of the year and the years ahead. It's a lot for us to chew on. So whilst we do that, I want to acknowledge the second batch of executives whilst you prepare your questions. So we're going to zoom in into the Q&A session. So please get your comments and your questions ready. Those of us who are watching us online, also you can post your questions there and we'll read them out for the Scancom executives to address your questions. So I want to acknowledge Mr. William Tete, Chief Transformation Officer, Madam A.C. Meriba Wilson, Chief Human Resource Officer, Mr. Samuel Ado, Chief Sales and Distribution Officer, Palasidu Ofori, Company Secretary, and then Mobile Money Fintech Limited. We have acknowledged Mr. Shaibu already, and then Madam Susan. So Madam Dorcas Juma, Company Secretary, Godwin Kwame Tamaklo, Chief Regulatory Risk and Compliance Officer, Sir Solomon Hayford, Head Business Intelligence and Decision Support, Madam Sylvia Otue Champong, Chief Products and Service Officer, Madam Grace Bedine Japan, the Head Internal Audit, and Papa Osei, Head Legal and Reputational Management. So I think I'm done. If I haven't acknowledged you, please, you are duly acknowledged. Okay, so we go back to our audience. Those of us who are here and the rest of us who are online. If you have any question or comment, please, you are free to do so. Who is starting? Okay. So please, you mention your name and your institution.
Raymond Anane. Raymond Anane, Blackstar. So I have one question on just MTN, and then I have another question on the broader Ghanaian consumer. So on MTN, focus on the data segment. What's the current footprint and pace of rollout when it comes to your fiber home broadband? And are you going to be disclosing fiber home broadband enterprise line items going forward versus data, mobile money or mobile data line items, just giving how big the segment is becoming? And then on the broader Ghanaian consumer, what is your read on how the Ghanaian consumer is doing? I know inflation has stabilized or inflation has moderated, but FX, we are seeing renewed FX headwinds in this 2Q heading into 3Q. And I would just like to see what management is seeing. I would like to know what management is seeing in terms of when it comes to the Ghanaian consumer and how we are faring. Thank you.
Let me see if I'm alive. Thanks for your questions. I appreciate them. I'll take and Antoinette will take the one on how the consumer is feeling going into H2. So in terms of our fiber rollout, we don't disclose details of the numbers, but I'll give you an indication that the pace is increasing. There's a lot of demand for fiber, as you can imagine. I mean, there are logistical. It's quite a process, as you can imagine, to roll out fiber, and it's quite it's a relatively expensive process because you've got to get right away, you've got to put up poles, so it is. But we've managed to get it done quite efficiently to be able to get it rolled out very, very quickly. So if you had to look on last year versus this year, the pace has increased quite significantly. In terms of we did public information, we dropped our fiber prices recently. That was a 30%, which is not here, but I know it was a 30% drop. So we've brought down the price, and we're increasing the pace of deployment. So and the benefits of fiber, which is quite an interesting one to realize. Fiber is not a direct substitute for you as investors for mobile data. So a lot of people think, oh, if you do fiber, you're going to cannibalize your mobile data. It's not a one-for-one. Yes, there is some cannibalization, but often it's more of an enhancement. It helps our network because it takes heavy usage off the network. So if someone was at home using mobile data to watch TV or whatever they were going to do, you now can put it on a fiber network and take some of the pressure. So it adds to the data growth, and it enhances the growth in data, to your point. That's why our outlook for data is that it continues to grow at the pace you're seeing now. Thank you. Antoinette?
Thank you. Thank you for your question. As you mentioned yourself, inflation has come down quite significantly. Interest rates have improved, though they've started trending upwards in the last month or so. And you and I live in this economy, so I'm sure you know how consumer spend is going within the economy. As far as MTN is concerned, our services have almost become vital because we permeate the lives and enhance the lives of our consumers everywhere. And so, as you can see, our data services continue to grow, both in terms of usage and even in spite of the value back that we gave last year, our data revenues continues to grow because the number of users are increasing, and as well as the usage is increasing. People use it for education, for work. It's become a part of life. And so I would say that the trends in our performance are generally reflective of how the consumer spend is going on within the economy, at least as much as it pertains to our business. I always say that people decide, even when inflation went up and the economy was tough, at the end of the day, people decide where to put their limited funds and how they allocate their limited funds based on the value add to their daily lives. And so that's how I would respond to your question. Hopefully, it addresses what you wanted to know.
Okay, thank you. So we'll take a few questions from our online audience, and then we'll come back to our in-person audience. So the first question is, can you elaborate on the growth drivers for data? And then the second one is, can you comment on the seemingly slowdown the growth of mobile money? And then the third one is, when is MTN going to launch 5G in Ghana? And how fast is it going to across Ghana? Thank you.
Let me talk to those data drivers. There's a few things that underpin our growth in data, and I mentioned some of them in my presentation. The reality is that what drives data is, to a large extent, is what happens with smartphones. So we now 23.5 million smartphones. So that's the first thing. You've got to have a smartphone if you want to use more data. So as smartphones grow, and that's a 16.6% growth in active smartphones on the network. So that 16% growth will underpin growth in data. And then obviously you're going to have more active data customers. Data customers are now 20.6 million. Quarter on quarter, that grew 4.6%. And then year on year, we grew 16%. So the number of customers is growing. And then finally, so this is kind of, if you have to build up the pyramid of it. I'm coming like a lecturer now, feeling like I'm at university. But anyhow, so you've got that foundation that you need the smartphone. On top of the smartphone, you need people to use the smartphone. So that's the active data. And then the top of the pyramid is, what do you do with it? So if you're just going to have data and do nothing with it, none of us buys data just to stare at the number of megabits we have on our phone. We use it for things. So as people start to consume different services, and that's our platform play. So we want to give customers experiences and services that they may not normally use. So they might use social media, they might use YouTube, etc. I'll ask a question just now and see who can guess what it is. But so people use social media, but they also will use things with us, like I said, gaming, small businesses using it for enterprise products. So those things all stimulated. What do you think is the, here's a question for everyone else. What do you think is the biggest consumer of mobile data, data products on social media? 100% right. TikTok. A lot of people think it's YouTube, but it's not. It's TikTok. And the reason for that is very simple. YouTube's second, by the way. In terms of number of customers, WhatsApp is the biggest, but I mean, you're not always opening videos and things that you do use it. But why TikTok? Well, the reason is TikTok's very interesting. If I say to especially young people, all of you, you're all young. So if I say to you, watch I'm actually terrible like this as well. If I see a video that's 23 minutes, it feels like a lifetime. So you may not watch a 23-minute or 15, unless there's something you really want to engage with the content. With TikTok, as you're watching a video, it's loading the next one. So when people say to me, why is my data being consumed so much on TikTok? I say, because as you're reading the one you're looking at, the next one is already loading. So whether you watch it or not, it's already loaded. That's how TikTok works, because if it didn't do that, you wouldn't have to be able to click, click, click through the whole time. So you may end up watching an hour of data by looking small things at the time. So there we go. So TikTok is the biggest consumer. But when it comes to 5G, and then I'll hand over to Shaibu on the mobile money one. So the 5G process, I'm sure there'll be a lot of questions around 5G, so I'll cover everything at one time. The process has kicked off. The process required whoever's interested to show their interest. Thereafter, the process, there was an extension given for another 3 weeks for people to get the information. We were allowed to pose questions. MTN, like other operators, sent questions for clarification. Those clarification answers were sent back for everyone to see, so it's a very public process. Thereafter, each company, including MTN, we, in a process, our own internal processes now to consider the costing, the valuation, etc. And after we've done our internal process, if this is something that is going to make sense for us, like we do with all spectrum we buy, we would then go ahead and put in our offer and then move from there. In terms of if we did get successful and were to do that, it's important to understand that these things are not like we've just got the equipment hanging around on the network ready to turn on 5G. It is a process, much like 4G or 3G, where you have to buy equipment. So when you see the cost of, say, a license, that's one part. The other cost is we have to invest in the network, putting up equipment. And to Antoinette's point, we have very disciplined capital allocation. As investors, you would hate us just to throw things at the network. So we have to be very deliberate in the way that we put equipment on networks and where are high density areas. Just so you're aware, the only 2 million devices that carry 5G as we sit today, whether that's a phone or it's like a modem, that's where we sit at the moment. But of course, these growth potentials, so 5G has a potential for the future. So that's where we are with 5G. Sorry, thanks.
Thank you. I'll take the question of mobile money. Seemingly slowdown of mobile money. Okay. Thank you. So the question was around the seemingly slowdown of the fintech business. I think first and foremost, let me say that on the surface, it looks as if it is slowing down because you're seeing a year-on-year growth rate of around 23%. But let's go back to real growth, right? With average inflation rates of around 3.8%, a 23.3% year-on-year growth is a significant growth. And also, let me also contextualize mobile money revenue trend pattern, which is slightly nuanced compared to the connectivity business. mobile money is driven around financial transactions. So with a stronger economy in terms of the macros, it has a significant impact in terms of the transaction flows. But the way you see whether your mobile money business is healthy is to look at the underlying drivers of your performance, which is whether your transaction value, the ecosystem activity is in good shape. And what we are seeing is a very strong ecosystem play. As a matter of fact, we are seeing a deceleration in the growth rate of cash outs post the removal of e-levy in April last year. We've seen a very strong deceleration of cash out, actually an acceleration of P2P, person-to-person transfer, which signifies the level of activity in the ecosystem. So what I can give you comfort around is the fact that we have a very strong ecosystem play. You've seen the float balances on the account are expanding, which speaks to the velocity of transactions and ecosystem activity happening today. So you have a very strong business and is positioned to capture long-term sustainable value for shareholders.
Thank you, Shaibu. So please, our in-house audience, any questions or comments? Okay.
To have your access to your network. And then the second one is, please, my question is, does it mean that every 6 months, dividends will be given back to shareholders?
Let me take the last one, and my boss will take the rest. As mentioned during our presentation, we changed our dividend policy to a quarterly dividend, and we did that at the end of Q1. And since then, we paid a quarterly dividend for Q1, and we are paying a quarterly dividend for Q2. By saying our dividend policy is a quarterly dividend, what we mean is that as long as our earnings, our cash flows, investment profile, and everything, regulatory restrictions, allow us to pay dividends, we will pay a dividend every quarter. If any of these puts a constraint in the way, we will not pay a quarterly dividend. But as long as we are able, we will. Thank you.
I got two interesting questions. Okay, so let me talk about rural first. Rural is extremely important to us. We understand that everyone has someone that they know who are in the rural. We need to allow areas to develop and people to have access to a digital life. So currently what happens is we pay into a universal access fund, 1% currently of our revenue, into a fund that goes into a company that manages rural deployment, GIFEC. And they do the rural deployment. We give donor sites, etc., but we don't do direct rural deployment. Now, sometimes that can be a confusing term because sometimes someone will think, is this a rural area or not? Sometimes there's designated rural areas for GIFEC. So some of the areas we are not doing the deployment. We go over donor site, we we support, but we don't manage or deploy. In fact, in those areas, we sell at the cost we. There has been renewed efforts to say, how can we do more? And that's something as a business, we'll always look at opportunities of how we can do more to support the people in the rural areas. So you can be sure MTN is willing to support where we can in rural areas. So that's on rural. On SMP, yes, we are still designated SMP. The modalities around SMP are very clear. There are different ways that we're measured on SMP, and the regulator has made those public. So we're still under SMP, and we still operate under that. And those are things we have to report back to the regulator. Some of the things include how we price. Some of the things include how we inform and how we approach the market. Those things all still exist. So those things haven't changed. They still remain in place. Thank you.
Thank you, Steve. So we'll take a few questions online. So MTN has maintained a very strong growth trajectory despite already having a dominant market position. As the business gets larger, what does management see as the key drivers of growth over the next 3 to 5 years? And where do you see the biggest risk of growth normalizing? So that's the first question. The second question is, digital service revenue has significant potential to become a larger part of the revenue mix. What is management's ambition for digital revenue over the medium term? And which products do you expect to be the biggest contributors? So I'll add the third one. What percentage of total Momo revenue is attributed to advanced services? Thank you.
To do these questions in Ghana, because people ask very good questions. Okay, all right. So let me talk about the growth drivers in the medium term, and I suppose the risks at the same time. For us to continue to grow, as I said in the presentation, the focus is on our 2030 strategy. And our 2030 strategy is around, and let me just reiterate it, it's around platforms. So in other words, you have this base, and the same for Momo. It's about what you add on top of it. So if you want a sustainable business, you can't just rely on connectivity. Let me give you some examples. If I connect your home with fiber or with fixed wireless access, and that's all I do, then the revenue stops there. So how do I work with you and say, can we do something with security services? Can we do something with MTN TV, entertainment? Can I do something at your home with gaming? So all of those elements are what creates the sustainable model. There's still a long way to go for data. Even at 19.3 gigs, people say, is that the end? But, a year ago, everyone was asking me, was 18 the end? We have there's a lot of consumption, but that's consolidated consumption. So why is there growth for the next 3 to 5 years? Around those. We see good growth coming out of our home environment. We see good growth coming out of our digital environment. We see, obviously, Momo will continue its good growth trajectory. We see good growth of the SME and enterprise business, which is growing very, very fast as well, also close to 100%. So all of those add to that. It's not, when you go to, for example, a small business, it's not just about giving the connectivity. It's about, hey, what can you give me to help me manage my business? How do you give me access to the internet? And AI will is already bringing in new streams, new opportunities for people to create new businesses, and AI in itself works. I'd just like to anecdotally say something about AI. I was in the Invest Ghana conference in London, and I sat in a workshop with a lot of academics from the UK, and they were going on and on about AI. And I said, you all need to remember one thing: the bridge between the person or the business and the AI computing capacity is the networks. Switch off my network, there is no AI. And they were like, that's a good point. So I said that we have to work hand in glove, and that's why AI is central to us as MTN. So some of the risks, I think the risk becomes how we manage and ensure that capacity keeps up with demand. That's really key. So when we look at spectrum or investment, we are rolling out 500 new sites this year. We're already in the process of doing it. Let me put that in context. We have 5,100 sites. 500 is almost 10%. Do you know how many sites we did last year? 50. Do you know how many sites we did the year before? 25. So 500 is a massive leap. Okay, so we're investing in coverage. We're investing in improving the network in terms of capacity, spectrum, etc. You saw us do that last year. And we're investing in using AI to make the network as efficient as possible. So if we don't do those things, the risk is that the network can't keep pace with the demand, and that's why we have to keep investing. We're investing 1.1 billion over 3 years. We did 1 billion over the previous 5. So you can see you have to invest. These kinds of businesses require investment. It's just the way it works. About digital revenue, yeah, I can't share exactly what we'd want them to be in 3 to 5 years. I'm very aware of what I would like it to be, but my CFO will kick me under the table, and I'm tired of being kicked, so I won't do it. But I can say this, that digital is a great growth area for us because it was 1.5% of our revenue, which we did show about a year ago, and now it's heading towards 2.5 to 2.7, 3 in that area. So it shows it's a big growth area, 98%. Where's it coming from? It's coming from, as I said, a lot of it comes from gaming, not betting. We have a young population in Ghana and in Africa, and they use gaming. Gaming can also be used for education, so it's something we would like to support. But that's part of it. And also in terms of additional products that we'll be introducing, like MTN TV, etc. Those things will help to grow the digital products for our business. So yeah, and then I'll hand over to Shaibu.
Just on the question of advanced services contribution to revenue, it sits around 34.7%. But let me just point out some of what we are seeing in terms of structural shifts that we've seen in the market from a customer behavior point of view. I think I alluded to that point earlier on. But just to points. So in 2025, the contribution of cash out was in the region of around 47.5%, and this has since decelerated to around 41.6%. If you take the person to person, that has actually increased to 23.7% from around 18%. So quite a big structural shift if you look at it in terms of the way our consumers are accessing our services. And that crystallizes the point I made earlier on around the sustainability of the business and the fact that still as.
Thank you very much. So we'll take the final set of questions from our in-person audience as we draw the curtains on today's program. So, okay, so Omar, we'll start with you.
So, sorry, this is my personal question. This is Ishab. So now that the spin-off is over, what is the other play for the mobile money fintech beyond just Momo payments and other financial services? What is the other play for the business now that the spin-off is successfully over? And Jerry, can I ask some more online questions? Or you want?
Maybe just one, and then we'll take just two from the room, and then that will be all. So just read just one.
So what are the biggest risks management currently MTN faces for its earnings and shareholder value?
Okay, thank you.
Okay, I'm Derek. I was happy to hear a presentation talking about some security risk or security concerns you want to provide to consumers. Looking at MTN's growth in the market and how MTN is deemed, because of the market size, there's a lot more cyber threats, especially through Momo. What are some of the key measures being implemented by MTN to tackle this, to reduce the impact on stakeholders? Because I know a lot of people are being scammed via mobile money. I don't know if management is aware of if it's insider threat or it's lack of awareness. Thank you.
Thank you.
Okay. Sorry. Answer the one on the risks facing us if, I suppose, the macros change, and then the rest are for Mama.
I think my boss just answered the question. Yes, obviously, a massive change in the macroeconomy will pose a risk to our earnings. But every time I say this, I also add the fact that we went through 2022, we went through 2023, and our business remained strong. So we take measures to try and mitigate, to a large extent, as much as possible, organization against macroeconomic swings. However, one can never tell what that could pose for the business. And I think the rest of it we mostly have in hand. So I would say that's the biggest threat. Thank you.
Okay. On the bit on the structural separation, I would say really it gives us space to be able to execute on our fintech strategy in a bold and in an agile manner. Now, we are all witnessing some of the changes that are happening from a regulatory landscape. This presents a lot of opportunity in terms of all the regulatory changes that are being rolled out to build inclusion, create new streams of opportunity for a fintech business. You can talk about the virtual asset provider space, where it allows us to really leverage off the rails that we build to create an ecosystem play where we can actually pipe in a lot of services through our rails, and partnerships and collaboration with different entities will be done at a high scale. So we see this change as very timely because it just empowers us to be able to deliver new services, innovation at scale to our customers, to empower businesses as well. So that's it for the structural separation. In terms of the risk you mentioned, I mean, that is the reality. I mean, what we are selling today in terms of offering to our customers is trust. And this trust is not just a mobile money issue, right? It is actually now a phenomenon that cuts across every aspect of is from even WhatsApp takeover. I mean, today the attack plane is diverse. The only reason why mobile money comes into in terms of the front line is because that is a point at which, right? So from our point of almost what are we doing to ensure that the platform that we are running has 100% integrity, and that is an area we don't relent in terms of our investment in ensuring that we have all the investment going into providing a safe our customers to transact on. That is basic. Number two is, how do you ensure that you also support our customers through the journey, and especially now we have mobile applications all over, consuming them, at scale. How do we ensure our customers through that journey? Because more than 99% of all the fraud issues that come to us that we are aware of are actually all driven on social engineering, and a big piece of it educate our customers and carry them along the journey. And this is not a question of whether you are literate or not. It cuts across everybody, and it's important that we work through where we put a lot of investment in. In fact, ways by going into the communities and engaging them, just as we did when we started the mobile money journey. We are at the point where we have to do that investment to ensure that we protect our customers. And over and above that continuous investment that Stephen in the platform to invest in resources that allow us to actually prevent some of these incidents from happening. And that is something that we are committed to as a business to delivering for. Thank you.
Thank you very much. And a very big thanks to our online audience and those who join us today, all the stockbrokers and the rest of the team. Thank you very much for your time. I know that there are still a lot more questions, but for the sake of time, you can send these questions to Jeremiah Opoku, the Investor Relations Manager at MTN Ghana, through investorrelations.gh@mtn.com. The investor relations is one word. So investorrelations.gh, GH is capital, at mtn.com. Or you can also download the presentation from the investor relations section on MTN Ghana's website. So you can also find this presentation there. At this juncture, we want to call on our Managing Director, Ms. Abnamwa, to give us the closing remarks. Let's welcome her.
Good afternoon, ladies and gentlemen. On behalf of all of us at the Ghana Stock Exchange, first, let me say a big congratulations to Stephen, Antoinette, the Momo family, and all the MTN executives who have joined us here today. Thank you very much. My partners in the media, we can never do this without you. Thank you so much for the massive show out and for being here to help us propagate the message of MTN and its performance. To the investors, the fund managers, the stockbrokers, the Young Investor Network representatives, those online and in person, your messages, your questions have been deep and insightful, and it's definitely not easier than what you face with the international investors. So that's why for us, this platform is so important. We see this as the most important platform to engage issuers and investors together to ensure that there is trust, and trust comes on information. So this platform enables information sharing between the two, and trust, which then gets traded on the stock market in your prices. So we're very happy to have MTN and other listed companies take advantage of this. For us at the stock exchange, what are we? We are a platform just like MTN is a platform. We are a platform to enable companies raise capital and for investors to take information from issuers and trade in the securities that the companies issue on the back of raising capital. We've provided a number of markets and options for companies to do so. So we have our main market for large companies on the equity side. We have the Ghana Alternative Market for the SME sector to raise equity as well. We also have our debt markets. And on the debt markets, companies can raise long-term bonds, short-term commercial paper, sustainability bonds, social bonds. So it's Sustainability Week, not just at MTN, but a key product that we have on this market is the sustainable segment of our market. And it's a market we are looking for products on. And so as MTN and other issuers are considering your capital deployment, sometimes it takes very sophisticated companies to lead the way and to do the demonstrative issuances that will give other issuers the confidence to come to the market. Today on our equities market, we have 39 listed companies and about 7 on our debt capital markets. Our medium-term strategy is to attract 100 companies. Within that framework, we see a lot of potential issuers within your supply chain. And it's an area that we want to partner you and other listed companies, that your supply chain that are strong SMEs or medium-sized companies can come to the market, because what we present is one, an opportunity to democratize ownership as well as strong corporate governance practices backed by the capital that these companies need. So for me, it's not a call just for the GSC and our stockbrokers to do, but it's a wider work for all of us in the ecosystem, so that we are in there together. The benefit is for all of us, and that beautiful dividend that you pay out, and that 30% is retained here in Ghana and enjoyed by investors in Ghana, cuts across the entire ecosystem. So we look forward to really partnering with you to do this. Our market is performing strongly. The equities market performance has been the envy of the world for a few years now. Stephen, you were talking about London. We met with colleagues at the London Stock Exchange, and they were clapping for Ghana. A lot of that performance is really credit to MTN and your shareholders. So I want us all at this point to acknowledge the contribution of MTN investors and a very transparent company that has provided the information, but as well our partners, the stockbrokers, who have provided platforms that enable retail investors to have access to the market and trade in the company. In December last year, I stood on a platform after we had broken the IPO drought of the last one being MTN in 2018. December last year, when we were admitting First Atlantic Bank, after 7+ years of no IPOs, I made a prayer in front of all of Ghana, which everyone laughed. I said I wanted the bell to ring every month for the admission of a new company onto our market. God listened to my prayer and has granted us, because we are learning to crawl, has granted us 3 IPOs in 6 months. It really is a testament to all the work and building blocks over several years that at the Ghana Stock Exchange with our stockbrokers, engaging other potential issuers has led to this. I'm happy to announce that there's yet a new company that we have approved to access debt financing, and hopefully this August we will also ring the bell to bring them to market. And we will have had 4 companies in 8 months raise capital on the market. The work remains moving to monthly and more than 1 monthly, so that the capital that is in Ghana, all of us contribute to pension funds. We have savings, and just like having the infrastructure is not enough. So MTN doesn't see providing new broadband services as their work is done, but the use of that. So having the infrastructure of the Ghana Stock Exchange is not enough. Our work is to attract issuers and to attract investors onto that platform. And it's only through that that the economic development, the transformation, the wealth creation for individuals, for our companies can be achieved. So far this year, equities market is up 75%, one of the best performing in Africa and definitely globally. In terms of number of trades happening on the market, looking through the platforms that have been deployed, I can say that our average number of trades per month has gone from 25,000 per month last year to 300,000 per month this year through these platforms. So when I'm on my friend over there and Shaibu, that let's work to bring more of these products, bring access to the market. The few we have are showing us that there's strong appetite. People are looking for investment opportunities. And just as MTN did, we call on other issuers to provide that. These also, of course, provide various risks for us at the exchange, and financial literacy is a big area for us. We've partnered with the Young Investor Network. We invite MTN and all other issuers to work with our partners, Young Investor Network, to grow the financial literacy. Just as literacy is important for responsible use of digital services, we believe that financial literacy will reduce wrong advice and scams in this area as well. It's exciting work for all of us at the GSE, and my team and I are more than committed, ready, sleeves rolled, hands on deck, and we will push this objective of making Ghana Stock Exchange the preferred platform for raising capital and for investment to transform Ghana's economy. Thank you for being with us this afternoon.
Thank you very much, MD. So, if the plan is to have, the ambition is to have one a month, one IPO every month, then pray for us. Because we have to deliver. Pray for we the workers here. We will deliver. We are all committed to it. But remember us in your prayers. And bring your supply chain people to the market. We are ready to welcome them. So all too soon, we have come to the end of today's program. Thank you all very much. Our online audience, thank you very much for your time. And those of us who join us in person, thank you very much. So from here, we'll take pictures, and then we all go to the investor lounge where we've set up the refreshment. Don't be in a hurry to leave. Let's also network. It's very important. So from here, the rest of us will go there, while the exec team remain here for some interviews with the media. So that is the plan. So once again, thank you very much. And we have come to the end of the program. We hope to see you soon. Thank you very much for your time. God bless you.